Like many entrepreneurs, I have a very specific morning routine that really helps me ensure that I get my day off to the right start. And one of the important parts of that morning routine is listing a few things that I'm grateful for. Sometimes I talk about my friendships, sometimes I talk about business or the health of my friends and family. But one thing I don't think about enough is the fact that I was born in the United States, which is one of the most favorable places to be born generally, but also it's likely the best place in the world to invest in commercial real estate. Today, we're going to talk to someone who wasn't born with that incredible advantage, but certainly didn't let that get in the way of him seeing the opportunity in the US and making the commitment to come here to pursue real estate. In fact, he and his friends wrote a book about this exact topic, which is actually one of the reasons I wanted to have him on. So in this discussion, we're going to talk about why our guest was motivated to give up a high-income job as a structural engineer to pursue something more entrepreneurial, and then to make the commitment to move across the world to the United States. We also talk about raising capital from investors. Our guest has a structure called the 6P structure, where if you follow the structure, it's going to help you in your capital raising efforts, but also if you just think about it structurally to ensure that each one of these Ps is being crossed off your list, it's definitely going to help you with a leg up in terms of getting the ball rolling, having those initial conversations, and establishing credibility. Then we talk about elevator pitch. To be honest with you, this is something that a lot of new real estate entrepreneurs struggle with. And it's so important in terms of getting your foot in the door in those initial conversations. I remember when I was getting started, my elevator pitch was like 15-minute long. And 15 minutes in, I realized that the person wasn't really that interested in the first place, or maybe was interested in the beginning. But when I decided to give them this massive monologue, they started to realize maybe I wasn't the kind of person that they wanted to invest with. So it's going to be really helpful for a lot of people that are feeling like you haven't been able to inspire that curiosity for people that you're talking to. Hey, if you're interested in signing up for the CFC mentorship program for Q4 of 2019, make sure to go to cfcmentorshipprogram.com. I continue to be really passionate about this program. It's something that I've become really proud of over the last year. And as I continue to see people graduate from the program, instantly have a clear outline of what they're trying to accomplish in the sector, and already have the educational background from the mentorship program itself, it really makes me happy. It makes me proud to be part of their success. And in a few weeks, we're actually going to do a quick interview with some of the previous graduates of the program. And I'm sure you're going to see why I've been motivated to reopen the program after hearing some of their stories, especially when you consider, where they started before the program and now where they are today. So like I said, if you're interested in learning more about that mentorship program, go to cfcmentorshipprogram.com, click apply now. And Adam Carswell, a colleague of mine who is actually a graduate of the program, will reach out to you, schedule that introductory call. Okay, hope you enjoy the episode. How's it going, everyone? Our guest for today is Reed Goossens, who is a real estate entrepreneur and managing partner of Wildhorn Capital, where he's responsible for asset management and all things financial, including accounting and underwriting. Since 2007, Reed has been involved with large-scale commercial construction and real estate development projects with a combined value of more than $500 million across Australia, the United Kingdom, and the United States. He also worked on a massive project in London in anticipation of the 2012 Olympic Games. He's the host of a real estate investing podcast, Investing in the U.S., and Aussie's Guide to U.S. Real Estate, where he interviews other distinguished real estate entrepreneurs about their success and helps guide them to entering into the U.S. market, which is actually something that can be really challenging if you don't know what you're doing. All right, he's actually been on the program before, so we'll link to those previous notes in the show notes page. But Reed, honored to have you on. Thanks again.
G'day, mate. Thanks for having me back.
I'm really happy to have you on today because there's only one person in the real estate investment world where you say, I wrote a book and I just don't ask questions. I click buy and just expect it to be at my door in 2 days with Amazon. That's exactly what I did. You just launched 10,000 Miles to the American Dream. Tell us the big picture of that book. And also, it's structured in a unique way. So talk a little bit about that as well.
Sure. Well, it's been a long time coming. Where do I start? So this whole book came out of an idea that I had about 3.5 years ago. And through my podcast, I'd interviewed a handful of other Aussies that had made the pilgrimage out to the United States, either married gals here and started real estate businesses. And through that, I sort of was like, look, entrepreneurship is pretty lonely. And so I said, I think I sat down one day like 3 years ago and I just wrote out an email. I included everyone's email on there. I was like, hey guys, you don't know each other, but you need to. We need to know each other. And we're all Aussies. We have the same similar humor. Like, let's just start with a monthly mastermind call and just bounce ideas off each other. And these were guys who had different expertise. So got some guys in mobile home park investing. Some guys just do turnkey investing down in Texas. I've got a guy who's just only involved in real estate technology, which is really cool. Anyway, we started out, had a lot of good banter. We started meeting up once a year. Bringing wives and girlfriends along and having good Aussie time together. And then about a year and a half ago, we said, well, look, why don't we write a book as an extension of the business card? We've all got really awesome stories. And, there's 8 of us. So we could probably, throw a bit of dollars at it and per person to be pretty cost effective. So I'd already launched my first book and I was like really keen to like keep that bandwagon going. And given that, so we ended up deciding to, put it into a book form, and everyone has an individual chapter about their story and about their topic. And it just was really an awesome way to leverage the group and really show that this group has a lot to give. And if a bunch of Aussies can move exactly 10,000 miles across the world and make it happen and achieve financial freedom, then why can't the average American? And so it was really a story about that. We branded it called The Real Estate Mates. I had tongue-in-cheek called it the Aussie Real Estate Mafia before we actually gave it an official name, but we sort of did some testing and people didn't think mafia was a good word, but that's, I laugh. But anyway, yeah, the name came out of a brainstorming session in San Antonio we had about 2 years ago, and 10,000 miles to the American dream. It doesn't even speak to real estate investing. It sort of just speaks to the idea of wanting to achieve financial freedom and with sort of reading between the lines. So the book's all about real estate, but it's about achieving financial freedom. It's about backing yourself. It's about, if you can't back yourself, then who can you trust? And you got to get off the fence. And our story is supposed to be an inspiration to other folks in the market looking to get started and just giving a different perspective from the 8 of us, because we all do have slightly different perspectives, but we do have that ability to come from a market in Australia where the barriers to entry are a lot higher than they are here in the United States. The lending environment is completely different. And, if you are thinking about it as a listener on this show, or, you want to get involved in it, then the only thing stopping you is yourself. And, what's your excuse? We can do it. So can you. So, it's honestly as simple as that. It takes a lot of hard work, but we've got there, and, definitely pick up the book if you get a chance. So, yeah.
Certainly. And I actually really like the concept because everyone loves a hero's journey, and the idea that you had to overcome basically the Pacific Ocean to get to a place that was a reasonable place to invest in real estate, it just makes it really compelling for the people, especially those that are already here in the United States, to not take for granted. You mentioned the lending markets, the cash on cash returns that are appropriate or acceptable here, the entirety of the tax laws, which are very favorable in the United States. Right. It just makes you say, okay, listen, I should definitely be involved with this. And if they can do it, I can do it. So I really like that. Now, quick question just about the book itself. Did you guys know each other at all in Australia? Did any of you know each other?
So, no, not in Australia. No one actually knew of each other in Australia. One of the guys one of the blokes in the book, Ben Gray, he and I actually met at like 2012, fresh off the boat. I'm fresh off the boat from Australia, like 2 weeks of being in New York City. I'm at like the New York RIA. Ben came up to me afterwards, like, oh, look, another Aussie in the room. And like, we met from there and we live in New York and our wives are friends and all that sort of stuff. So he was like the first guy sort of quote unquote in the group. And it wasn't until like 3 or 4 years later we actually formalized the group. But no one actually knew of each other in Australia. It was all through moving here, networking, and then realizing, hey, there's a couple of other Aussies in the space. Let's get to know one another. So yeah.
Very cool. And obviously it's an interesting question. Australia is like close to the size of the United States. So it's like, oh, you guys all happen to be from Australia. It's like, that's not that much of a coincidence. It's like the difference between being in Florida and Seattle or something like that. So,
right.
Okay.
Right.
Understood. Now, do any of you guys, the authors of the book, do you hunt for the same deals or do you have different investing strategies and it's been able to kind of keep the separation there so it's not too over competitive between you two?
Yeah, there is a bit of overlap. We really tried hard to lean into what we are passionate about real estate. So there is a chapter about multifamily investing. I'm in multifamily investing, and I didn't even write a chapter about multifamily investing. I wrote a chapter about pitching effectively and raising capital from investors. So yes, we have the same mindset about growing wealth through real estate, and then there's a few overlaps here and there. But by and large, it's more about being an entrepreneur first and foremost. So, the way in which we've all discovered financial freedom, I think, is a real takeaway through the different facets of real estate. And some of it is overlap, but the majority of it is pretty out there. As I said, like Tim Manson, he talks a lot about real estate technology. He moved over here and started a real estate technology company in Silicon Valley. Like, just wow. He's from didn't go to university and just all in around the real estate space and around technology, and how I personally think technology is going to be a massive disruptor to real estate, because the way in which a lot of people do real estate transactions these days is very mano a mano, particularly in the commercial space. So just different ideas, thought leadership, perspectives, again, coming into that one book and really bringing a different level of a lens, I should say, onto the different facets that you can make money here in the United States through real estate investing.
Interesting. Yeah. And I agree about the technology. I think just 3 years ago, you and I were kind of considering implementing an investment portal to provide our investors with a similar experience than what you would expect with E-Trade, for example. And I think that both of you and I were a little bit ahead of the curve in the sense that the market hadn't really adapted that technology, and now should be at least considered the industry standard, at least in the world that you and I live in. You have to make 100%. That investment. You have to provide that transparency, but also it really helps as a operator to be able to track everything, track every communication, provide that level of detail, provide that level of experience to your investors. I think that we're quickly going to see more and more of those groups exist. And then because of that, the prices are going to come down. And it's going to be absolutely mandatory. So yeah, it's definitely interesting. So you focused in the book on the syndication component, capital raising, as you said. Let's talk about why, number one, why this is so important to your segment of the real estate business and some of the content that you discussed in your chapter.
Yeah. So look, overall, if you haven't, go back and listen to the other episode that I was on the show about, but, I'm an engineer. I didn't come to this country knowing that I needed to raise money from other people, or OPM, all those sexy acronyms that they have for other, but that is in itself the way in which a lot of companies scale. Google, Facebook, all the big companies in the world, that it's not just the founders that sit on a pile of cash. It is using other people's money to grow a business. And that's the same with syndication. We call it real estate syndication. And I focus a little bit more on how to do it as an operator, like how to go out and brand yourself, how to go out and have investor, pitch to investors and pitch effectively, how to have presentations that look professional, how to change your online profile. Like there's all these different, I call it the 6P rule. And, it's in and around trying to change people's thoughts about, okay, if you're going to want to be successful in real estate, you can go and invest on your own and create a little nest egg, and 100% all power to you if you want to do that and just create it for your family and have a small portfolio of 4 to 5 assets, that's great. But if you want to scale into large, 100 units, commercials, self-storage, the big side of the coin, then you're going to have to learn how to syndicate. And that means being a thought leader. That means branding yourself. That means pitching effectively. So all those aspects I sort of cover in my chapter. And really it's my learning curve of how I've seen other people do it effectively. Again, I was not formally trained in marketing. I don't have a marketing background, but I do have an ability to look at someone they've done these steps pretty similar to that other person. Another person did it similar to that person. So then maybe we can try and, write an acronym for it and highlight the different, in this case, P's that people use effectively to go and raise capital, close on more deals, and then scale a real estate business. So that's really why I talked about that in my chapter and why it's important for me, because it has allowed me to come here to the United States, and I started buying my first property for $38,000 all cash. I now control $120 million, and I don't say it to brag. I say it to I've achieved that through real estate syndication, which is massive. And I wouldn't have had the same opportunity in Australia to do that. So again, back to my perspective, back to the story, back to the sort of the abilities that lie, the opportunities that lie in the backyard of the Americans in here in the United States. Like, sit up and pay attention, because as I said, if a bunch of Aussies can figure it out, then so can you.
Agreed. And I also think that it's important to recognize, for better or for worse, raising capital is the most important, the most lucrative, the most sought after skill in the entire real estate sector. Now, there may be people out there that don't like that that's the case, but that's the reality. If you can hone in this one skill, you will almost always have an opportunity to have a job in the real estate market, because every single company needs that skill. Every single company needs someone who can snap their fingers and make $1 million appear. It's worth your time to focus on this. Even if you only want to be on the management side of the business, even if you only want to be on the operational side of the business, it is a great risk-effective, cost-adjusted way to hone a skill in the real estate market. So if you guys are just entering the market, this is something that you should be taking very seriously.
And I'll add one thing to that, is that the way in which we've since 2009, we've had this big wave of education, or even sooner than that, financial, IQ, increasing your financial IQ, the whole rich dad, poor dad thing. But also the access to deals has come in the last cycle where it's direct to investors, where, the previous way in which we've been taught to invest is through the stock market and blah, 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 and place your money in really safe assets because your grandfather told you to do that. Now it's a case of like, oh, hang on, since 2009, I've lost all my 401k money in the crash. I need to take control of where I'm placing that capital. And so people are more aware of that. I can go and put my money in a physically backed asset like real estate, and I can go and work directly with the sponsor. I don't have to go through a REIT or a publicly traded company on the stock market. And then so that's also what's changed. And I think I really love that about, the sort of peer-to-peer lending around crowdfunding, all these sort of sexy words. But at the end of the day, its indication is raising money from the masses in order to get from point A to point B in a deal. And you don't have to go through a middleman anymore. You can literally go directly to the operator and get some fantastic returns. And that's, again, a different way which I want to use the word disruption, but it's definitely has changed the landscape of borrowing money and getting your money, lending your money to deals and getting a really good return on an investment compared to, say, 10, 15, 20 years ago.
In the discussion, you mentioned, I think you said 5 or 6 Ps. What are those Ps, and what are some of the highlights of each piece of those? Yeah,
so try to break it down into like a formula. And again, I'm an engineer. I love formulas. When I wrote my first book, my editor said, Reed, it reads like a textbook. You need to get some help with that. But that's a different story. So I created these 6 Ps. Actually created the first 4 Ps in an online book that you can get at my website. But then I've added 2 extra Ps to it. So the 6 Ps are pretty simple. It's professionalism, pitch, practice, publish, profile, and patience. And I'll quickly run through those 6 of them. So the professionalism part of it is no one is born with just 10 years worth of real estate experience, particularly in the syndication game. And a lot of people struggle with the mindset to get over that barrier of asking people to invest in their deals. And a lot of people come from backgrounds like myself, engineering or wherever you come from, you have a skill set that you've developed in a professional workplace, or even if you're a trader, you've developed skill sets where you're being punctual on time, turning up and doing what you say you're going to do. That's being professional. You can bring those skill sets into the real estate syndication game. And a lot of people underestimate that and don't realize that. They are standing on a mountain of value, and they just need to understand that they need to identify the skills that they've developed over the last, however long they've been in a particular career that wasn't real estate, and bring it across. The second P is about pitching, and I talk a lot about, how to pitch effectively, and about how to develop a social pitch and a scheduled pitch and a closing pitch, and in and around, and how you can be effective in that pitch to engage people, whether good or bad, because objection to a good pitch is not a bad thing. It means that they're engaged. The worst response to any pitch you want is, particularly in Australia and the quote unquote British colonies, it's very much like, oh, well done on your idea, go off and good luck. It's sort of just very non-emotive when you pitch someone your big idea. So when you're pitching, you have to be effective about it. So professionalism, pitch, practice, how to get out and then, practice your pitch, and how many people you got to get out to raise money. I remember when I've had to raise my first $100,000 or $500,000 from a deal, I thought, I'm going to be able to raise this pretty simple. I approached 50 people, and out of those 50 people, like only 10 were really interested, and out of those 10, only 2 invested. It was like a real cold shower on how many people I had to keep entering into my funnel or into my ecosystem of businesses to understand what I do. And so it goes back to the effective pitching. But I've got to practice and practice. And it's that sort of 5% rule. If you approach 100 investors, you might get 5% of them to actually invest in your deal. So you've got to have that big mindset of how many people do you have to have in your investor database. So professionalism, pitch, practice. Profile comes down to your profile online. How do you go and change people's mindset into what you do today? So I was a structural engineer. When I first started pitching people were like, he's a structural engineer. What the hell is he doing in this real estate investing game? And I think the rule of thumb is you got to tell someone 7 times before it sinks in. So, everything in and around, your LinkedIn profile, your Facebook profile, having an online presence, your pitch and what you're doing in the direction in which you're headed, given that you might have come from, again, a different background. So the profile is really important. Having a good headshot, having a good message and mission statement, all these things go into profile. Platform is how that you get your message out there. We're speaking on a podcast right now. I started the podcast, my own podcast, podcast called Investing in the US because I had something to say about investing here in the United States. And so what platform are you going to use? And podcasting is one platform. You could use YouTube. You could use blogging. You could use monthly newsletters, whatever that is, a way to increase your audience, to increase your database. Lean into it and do what you're good at. Like, I'm not really that great at writing articles. I don't like it. I don't enjoy it, but I really love talking on podcasts and being on video. So I'm going to lean into doing those types of platforms. And the last one is patience, which I think is the most important thing. And when you start to raise capital from other people, it takes a bloody long time to do. It's not going to happen like flicking on a light. It will take persistence. It will take making sure that if you are doing a blog or a podcast or whatever it might be, you are consistent with your message and you're consistent with putting out good content, whether it's on a weekly basis or a monthly basis, whatever you choose to do in order to attract people into your sphere and into your message, then, make sure you do it consistently. And it will take time. It's not going to happen overnight. It's going to happen over a period of years. And I think a lot of people underestimate how long it can take. But if you have the right mindset that it will take maybe 3 to 5 years before you raising tons and tons of money, and you have that mindset going in, then you're not going to quit after a year when it doesn't work all at once. So again, professionalism, pitch, practice, profile, platform, and patience are the other 6 Ps. So yeah.
Yeah, so much content there. And I think that there's so many little key takeaways that people can make a mistake on, but at the end of the day, the patience and the consistency and the focus and just the determination that you're not going to give up is probably the most important one. I've talked about it many times in the show that my first capital raise, I was confident that we're going to be able to raise $1 million with this first luncheon that I had 30 accredited investors show up, friends of family, people that knew me, maybe friends and family in like an extended version, right? So a +1, imagine that. And I did this presentation. I was very well prepared for the presentation, had success in real estate at the time, and basically resulted in $0 invested.
Wow.
And talk about a cold shower. And then the reason that it happened, of course, is that why I thought it was going to be such a no-brainer for them was exactly why they weren't interested, because they'd never heard of anything like this before.
Right.
Now, of course, a lot of things have changed since then, but you have to be able to build that platform in order to educate your investor base, and you have to be able to attract investors that are already interested in the types of deals that you have. And so, I'm in the process of writing a book right now, and that's exactly what it's about. It's the 6 Ps. I'm not going to take your exact wording, but it's very, very similar in that because the goal is exactly the same. One thing I think that especially newer real estate entrepreneurs can learn a lot from is that really quick conversation they have. Let's say at a dinner party, at a networking event, you call it the pitch, which is kind of a brief summary. Let's say a 2-minute, the elevator pitch, for example. Mm-hmm. Walk us through how you break that down and how people can think of it in terms of structure so that they can get as most across as possible without droning on and on and on without them kind of getting the buy-in from the person that's listening.
Right. Yeah, no, I think it sounds like you have similar war wounds to me, and you everyone will, right? And I think it's kudos to you you just got to dust your knees off and get back on the horse and keep going. But I think, realizing that you needed to change your message or how you pitch to people and educate them in that first room of 30 people is pretty awesome that you've come such a long way and you've been able to refine your skill, because at the end of the day, pitching is skill. And so, yeah, I talk a little bit in the chapter about 3 different pitches, and there's a social pitch or elevator pitch, whatever you want to call it. There's a scheduled pitch and there's a sales pitch. In a social pitch, there's an example, Martin Luther King, the I Have a Dream speech. He said that thousands upon thousands upon thousands of times to get onto the Washington Monument. He didn't just say it once. And he was very good and clear with his pitch. So with any pitch, you need to practice until it go to thousands and thousands of people. You're not going to change someone's mind by the first pitch you give them. You might wow them. But also a pitch is no one thinks of a pitch as, that was a good pitch. They think of a good conversation right. And a pitch is just a way in which you open up a good conversation. So name, same, claim to fame, goal in a game. So I'll repeat that again. What's your name? So my name is Reed Goossens. People don't want to be listening to your pitch and trying to figure out what the hell you do. If you're a doctor, my name is Reed Goossens. I'm a doctor. Tell me straight away. I don't want to be after 5 minutes of scratching my head like, what the hell does this guy do? So if you're in real estate, my name is Reed Goossens. I'm a real estate investor. My claim to fame when I first started was that I'm a structural engineer. I worked on the 2012 Olympic Games, and I've just moved to the United States to try my hand at real estate investing. claim to fame doesn't have to be in the area in which you're going to be successful at in terms of real estate investing. It just can be a wow factor. And then you want your goal and a game. The goal is, what is a goal here? Well, I want to help 1,000 people become financially free through investing in US real estate. And I want to do it in the next 10 years. So there's the goal and the game. And people like playing a big game. Like they like lofty goals. They like lofty, to hear of people who want to go out and change the world. And so when you're pitching like that, and sometimes you can just drop those last two if you don't have that sort of figured out right yet, but you can just focus maybe on the first three, the name, same, and claim to fame. You can focus on that. So my name is Reed Goossens. I'm a real estate investor. My claim to fame originally when I first came here is that I'm a structural engineer, moved halfway across the world in order to start a career in a foreign country. And now I'm getting involved in real estate investing. I want to help people realize the benefits of investing here. And I want to help 1,000 people in the next 10 years achieve financial freedom. Boom. In less than 30 seconds, I've nailed my pitch. Now it's changed over the time. It's now not that. I've gone on to do more and more things. But for people who are starting out, it goes back to that professionalism thing. I had a client of mine who had done $1 billion in mergers and acquisitions. It had nothing to do with real estate, but that was his claim to fame. He's done $1 billion in mergers and acquisitions. It was a really cool claim to fame. And so it's a way in which the social pitch is a way in which you get across the message really quickly, and it engages someone to have a really good conversation about what you do. And again, back to the example of Martin Luther King, you need to practice, because one pitch isn't going to solve the world. In your situation, it takes many, many pitches. So yeah.
Yeah, thanks for going into that level of detail. And I can tell you that this is something that takes practice. And even if you think you're good at it, it may not be the case that you're good just because it's simple, right? So just the case that it's, hi, yeah, I'm Hunter, I'm a professional real estate investor. Just because that's a simple thing to say doesn't mean that you actually are good at communicating it effectively in a way that attracts or intrigues someone.
Right.
And I remember that I went to this networking event a long time ago and just felt like what I was saying was conveying something that people would not be interested in. And I had a business coach and he asked me what I did and I literally froze up. It was like, okay, I think that's actually part of the problem here. Like I haven't said this in such a way that establishes how long I've been in the business, some of the main accomplishments that I've had, what's the reason that this person should get something out of this conversation. And people go to networking events trying to figure that stuff out. They want to establish a network. So you want to be the person that is interesting. By the way, one thing that I've found over the years is it's actually not that much about your actual background. Like someone may check out just because you're not that experienced, but for the most part, if you can show them that you have momentum, that is more powerful than anything. So I really like you saying the goal in the game because it's like, look, I'm going to accomplish this whether you participate or not. Right. However, I'd really like you to be involved. And it's like, okay, this guy's only been around for 6 months. He clearly knows what he's trying to accomplish. He's clearly identified the goal. And it's just a matter of, do I want to help him or do I want him to be a competitor of mine? Right. And that can really inspire some conversations and follow up, which is the point of the pitch in the first place. Right. It's not just to get them to send you $50,000.
Right. And it's that complacent, that sort of tap on the shoulder. Oh, well done. Good on you. Good luck. We'll talk to you soon. Like that sort of, I'd rather someone say, oh God, you're out of your bloody mind. Like when, like the whole Martin Luther King thing. Do you know how many people would have told him he's a flaming idiot,
Exactly.
Back in the 1960s? And he evoked emotion. And that's what you want from a social pitch when you engage with someone first and foremost. You want them to be engaged. It can be good or bad, but at least they're engaged. No, you obviously want them more good than the bad, but you want people.
Yes, but you have to play with it. You have to learn. That's exactly right. You have to learn where that line is, and you have to be playing with on either side of the spectrum and figuring out what works best for you. Always be authentic in terms of what you're communicating, but to your point, at some point, it's really good to hear that someone goes, well, that guy's never going to do that, but God bless him, right? Then okay, now I'm starting to be on the other side of that spectrum, but at least you're starting to play with that as a potential balance. So appreciate going into all that detail. I'm definitely looking forward to hearing a lot of listeners' feedback on the book. Let's talk just briefly about your current investing strategy. What are you currently seeing in the marketplace? I know you're focused on multifamily. Give us a little bit more benchmarks that you're looking for, markets that you're focusing on. What are you seeing? Yeah,
so really good question, and had a lot of conversations about this at a conference over the weekend. Again, comes a little bit back from my perspective. So what I still invest in multifamily. We have a few other investments tied up in hemp farming, but I'm not the operator on that. I'm just a passive investor. But for the business, I'm a real estate syndicator, and we manage, my business partner, Andrew, we are focused really on multifamily in true growth markets. We're doubling down on markets like Austin, Texas, is a prime example of why we're doubling down in these markets. And we're also looking at a longer term investment horizon. So my whole thesis on where we've come from, so back in 2008 to now, a lot of people have made a ton of money in multifamily real estate, and that's fantastic. However, the spectrum is changing, and we are going back to a more of a plateau rather than a 45-degree curve up the graph of returns. And where I come from in Australia, if you double your money in 10 years, then that's a really good return. And that has always been, drummed into me. So the last 5 to 8 years since the recession, a lot of people have tripled their money in like 4 years. And so when deals aren't penciling like that anymore, and they're taking a longer time to maybe double someone's money instead of 7 to 8 or 9 or 10 years, they think, it's a bad deal. Well, no, it's not a bad deal. It's just that your expectation has been so elevated over the last little while, coupled with that you've got to look at the risk profile on any one deal and understand the risk profile and understand why it takes a little bit longer because, like a market like Austin, I was speaking with someone the other day in Texas, and a lot of Texans are like, Austin was historically an 8 cap back 25 years ago. It's like, yeah, well, it's completely changed. It's now Brooklyn with cowboy boots, and you've got tech there, and, you've got direct flights in and out of London. And coming from Australia, where you have markets where a sub 3% cap rates, like LA, like New York, Austin is transitioning into that sub 3%, not right now, but in the long term, New York, LA, San Francisco have been, the downtown metros have been sub 3 or 4% for decades. And that's the same as in Australia, in Melbourne and Sydney and Brisbane. And so when I can still get a 5.5 cap on interest rate that's 4%, I'm going to have cash flow. And I'm also going to have growth in the market where I could double someone's money in 8 years. Now, it's not 5 years of what we've seen in the last little while, but it is it will take longer, and that's okay. And so it's about adjusting investors' expectations. I'm looking for deals with true value add on them, but also in markets where the supply is constrained and the demand is skyrocketing. So I'm doubling down in metros like Austin, Texas. So that's really the thesis right now.
Yeah, and we've seen a lot of success in those markets. And I think that, to your point, you're not relying on the continued growth of the markets for the success of the investment. What you're relying on is that spread between the interest rate and the cap rate that you're purchasing at. And that's something that doesn't take much relying. That's not a massive unknown. That is something that you can look at. You have other assets in the marketplace. You can understand that those other assets are performing within a high degree of certainty and a certain expense ratio. And you can understand there's a very high likelihood this is going to continue. Mm-hmm. Now, if you did suffer something significant like a loss of rental income or ahistoric occupancy increases, that's a different conversation. But especially despite the fact that there's been a lot of development in Austin or in Texas, many times in the multifamily sector, there's tranches of multifamily that need to be considered because almost all of the development in Austin, for example, has been A-class properties. Right. And so you can see a supply and demand cycle, but you need to understand if the oncoming square footage is not directly competitive to your asset, the likelihood that you're going to suffer some ahistoric correction is much lower. So it's a calculated risk. You're looking for risk-adjusted returns, and I couldn't agree more with you regarding the changing the landscape of what investors are used to. If I could have my entire portfolio turning at a 12% IRR from now and for the next 100 years, man, that is a remarkable outcome, a remarkable outcome. Now, that's not the way that real estate works, right? You get 18% for 5 years, you get 7% or 10% for the next 10 years, something like that happens. But looking for that 10, 11, 12% IRR is phenomenal. When you're talking about, let's say you're investing in a property that's 90% occupied, that has a break-even occupancy below 70%, which is probably in the range that your deals are. Yep. It's like looking at things on a risk-adjusted basis compared to what else is out there, compared to investing in the stock market, compared to investing in interest rates or bonds that have negative yields, for example. It just becomes more and more advantageous. So a quick question. On the other side of the spectrum, and you don't have to call out any names, but are there any other strategies listed in the book or otherwise that you aren't finding as compelling? Are there anything that you're seeing out in the marketplace where you're saying, wow, I'm really staying away from that. It doesn't make sense to me. I can't make the math pencil.
So to answer that question, I'm going to answer the question with two answers. One is that as an operator, I need to be an inch wide and a mile deep in terms of my expertise. So going and trying to be an operator in a self-storage when I only have, 1,500 units, I would like to be diversified in other asset classes in the future. But right now, as an operator, my investors love the fact that I'm really knowledgeable about multifamily.
Sure.
And I've come from that construction background. But there's definitely other great value add existing investments that you can go in and tweak the knobs or oil the machine, so to speak, and make it a really good investment. And that is, like what I'm sure you've talked about, self-storage, warehouse investing. I think the big shift, I had a really good conversation the other day about how first home owners and mass urban growth, particularly markets like Austin and first time home builders, that's a really risky market for me, just given how much correction there was. People lost a ton of homes back in the day. One of the big things that people aren't really talking about as much is cost of construction and getting dirt entitled. So if you compare, say, downtown Austin to downtown Los Angeles, price per square foot is pretty much on par. You're looking to pay about $250 to $300 just for the dirt in downtown Austin. I think LA might be a little bit higher, but you still have high barriers to entry. Given where we are in the market cycle right now, I would be very hesitant to be trying to get something entitled, given cost of construction is going through the roof, getting it out of the ground, the risk. Ground up construction, to your point about like more product coming to market, you have to work out, as long as it takes to entitle dirt. In Austin, it takes 24 months. In LA, it takes 24 months. You need to have, your sort of your crap sorted. You need to understand how to do that game. And that for me is probably one of the most riskiest investments if you don't know what you're doing. And if you don't know how to navigate the local municipalities' rules and regulations and to try and get something in the ground. And I think if you're trying to get it in the ground right now or get started, you're going to have schedule delay. You're going to go back to the big thing, cost of construction, tariffs are going up. Sub-trades are going out of business, cash flow issues. There's just a lot of things in and around the way in which we're building. Technology is changing. So ground up construction for me is not something for the faint-hearted, and you should understand what it is. And so when you're comparing that sort of stuff to, say, an existing asset that cash flows or has a bit of cash flow out of the gate and you can grow it over a period of 5 to 10 years, then that is such a safer investment compared to as I said, ground up construction right now. So I'd be very cautious if you're getting involved in any ground up construction deals around the country. It's not insular to any one market. So yeah.
Agreed. And I think the entitlement process, something you mentioned, that is on the highest spectrum of risk, in my opinion, especially if you're leveraging your purchases of land and depending on that change in entitlements. I've invested only once with a very experienced operator, every market advantage you can imagine, relationships with all the municipalities, and it was a land entitlement fund, non-levered, and there's multiple properties. It's going extremely well, but one of the properties, they didn't get the entitlement. Now, they're extremely well positioned. It's purchased only, they have a down money, they have a earnest money deposit. The purchase only takes place once the gavel strikes and they get their entitlement.
Yep.
But they didn't get the entitlement and they lost the hard money deposit. That's fine. The investment's going to be awesome. But what I'm saying is, imagine if that was your only investment. If you invested one time in a land entitlement deal and that happened to be the deal and you just lose the $500,000 for the hard money loan or the hard money earnest deposit, that would be crippling for some investors. Now, like I said, this is a fund and the returns are going to be phenomenal, but that was with someone that has every market advantage that you can imagine. So just keep that in mind in terms of, again, loss of principal. So whenever I have the opportunity to have someone on the show that has interviewed a lot of people, I always like to ask, some of your favorite guests and then also some of your favorite takeaways from those guests. And I know I'm just asking you this kind of on the spot, but I had some other questions I wanted to ask you. We'll save it for another time. What are some of your favorite takeaways from the podcast that you have, which again is called Investing in the US? It's a great show. Check it out on iTunes. What are some of your guests on there and some of the key takeaways that you've received from those guests?
Look, I think the big thing that when I first started the show, I focused really on the international investor and educating them about how to invest here because I'd gone through those trials and tribulations. The show's now pivoted into being more of it's not just for international investors, for anyone who wants to invest here. And the people that I get on my show, I really want them to be vulnerable in the journey in which they've got to their success and understanding that journey and their failures and being vulnerable to the audience I've really seen a spike in listenership rather than just like talking specifically about, I don't know, tax advantages of 1031s. Like you can only have so many episodes about that before people are just going to like turn off because it's just too dry. But when you can and I think it's a skill set that I've developed over time when I can sort of mesh together the journey with a good topic and ask a few key questions like you've just done just then about the entitlements, and we went into a little bit more nuance, but the overall big picture is the journey, right? And so people really resonate to that and understand that it's a marathon, not a sprint. In terms of some of the key takeaways, by and large, my podcast is like my mentor to me. I know when I get off a podcast, even if I'm being interviewed by someone or I just get off my own podcast, my energy's through the roof. Being on that same level, that same wavelength as other high functioning entrepreneurs is so intoxicating, and I love it. And I don't make any money out of it, but it's a way in which it keeps me sharp. I've got probably a list, as long as my arm, of all the different takeaways, but I can sort of summarize it by saying that it has opened so many doors for me on a personal level, on a professional level, also on like a mindset level, and it's propelled my career into a stratosphere I had no idea that I thought I was going to be at 7 years after moving to the United States. I know it doesn't sort of really answer your question, but it's sort of the high level takeaway from having a podcast, and back to that one of those P's, the platform. What I didn't know about when I first started, but I just gave it a go, and I was like, I want to see how this goes. I probably sound like an idiot when I first started, and I would hate to go back and listen to my first episode, and probably my mum and my dad are the only two people listening to it. But now I've grown, and that becomes, through growing, becomes self-awareness, becomes how to interview people better, and then how to tease the best bits out of that particular person in order to give the maximum advice and inspiration to my listenership. So yeah.
I really like your discussion about telling your story. And I too, by the way, your background as a structural engineer, I also really like getting into the nitty gritty. And I feel like that's what people want. I'm like, okay, 7 stages of due diligence. This is basically a book that I'm going to compartmentalize into a 30-minute speech. Okay, great. And then I just dump it on listeners and go, wow, I'm asleep. Actually, because there's nothing that ties in, right? It's like, yeah, sure, if I was actually going to build a speaker system, I would need the exact instructions, but you don't read speaker instructions just for the good of it. And that's kind of what I have the tendency to do. But I agree completely. Telling your story is really critical. And I think for people that are interested in being speakers, for people that are being interested in guesting on other people's podcasts, you should have a series of stories which interweavingly gets people access to great information about real estate. And so Reed's story, for example, it's an incredible hero's journey from Australia to the United States, but you can weave in other stories as well. So he got his first property in New York for buying $38,000 houses. Didn't turn out well for him. He realized this other story. Now he's got the story about how he started raising money through syndications and wrote his first book. And you're slowly starting to weave in those other stories. And that's what people can relate to. Right. And so then you can sprinkle in that detail as you go. So I actually really like that. And by the way, there's a good book that discusses this, which is Expert Secrets by Richard Brunson. And if anyone's interested in the topic, it's a really good, again, a ton of detail, but also just talks about the importance of stories in terms of making those details compelling.
And I also, one other thing is like anyone who's sitting there listening to this and thinking, gosh, I wish I could go do all that sort of stuff. Understand and give yourself credit that you are standing on a mountain of value, and that value could be to just one other person. It could be people in your friends and family. So know that you're valuable, and how do you go and launch that and tell your story to other people? So yeah.
Absolutely. And there's people out there that'll be very grateful for it. There's always some sort of side hustle that you're an expert in that other people are interested in. Mm-hmm. You can create an ebook. You can drive traffic to a website. You can exchange the ebook for a email address, and you're off to the races. So all really good stuff. And I actually do like that as a key takeaway for your podcast. Reed, before we go, let the listeners know the name of the book, how they can buy it, what's your preferred way for them to buy it so they can find out this awesome journey from 10,000 miles away.
Yeah, so jump on to Amazon.com. It's pretty simple. And just type in the words, like literally the numerical words, 10000, 10,000 miles to the American dream. And it will come up. It's a dark blue /black/orange title. It's got the 8 authors there. Get your hands on one. Give it a like on Amazon because we are trying to drive the reviews. So any reviews we can get would be awesome. And probably in the coming few months, we're going to try and get the Audible book out. And you can also head over to Real Estate Mates. That's www.realestatemates with an S, mates.com. And you can check out our story, a bit more about our story. And, the links to the Amazon pages are all there.
Awesome. We'll link to those in the show notes page. Reed, thanks again for coming on, man.
Mate, thank you so much. Really enjoy it every single time we get together and have a good yarn. So thank you so much.
All right, listeners, thanks for checking out the episode. As always, the contact information for our guest will be available in the show notes page, which is hosted on SoundCloud, iTunes, and Stitcher. Don't forget, if you want access to some of the free goodies that I'm talking about at the beginning of these episodes, like free ebooks, weekly investor emails, and articles about some of the most important investment-related topics, make sure that you have created an account with CFC because this stuff is automatically available. You can do this by going to cashflowconnections.com and signing up as an accredited investor. Of course, if you have any questions, feel free to email me at hunterthompson@cashflowconnections.com. Thanks again.